Stavros Tousios for M4Markets. Today we're going to have a look on the prices of gold and also WTI, the metal and the energy, two commodities, off to the 2000K for the gold after hitting a record high. And this is considered, of course, to be a retest. Now, here's what is important to pay attention to. Typically, corrections, which are moves, mean reversion moves, let's say, can be considered, are ending in three waves, which is what we currently see. So it will be important to pay attention to whether this move to the upside before we get a short-term low comes and not just stops the 2030 but goes above, because going above the 2030 swing is going to pretty much confirm that this is going to be a three-wave move versus a potential short move to the downside. Now that would confirm 5 waves down, and typically 5 waves down are associated with a new trend, which means we could see that correcting and then continuing lower down. However, there is a pattern that is called the flat, which ends in 5 waves as well. Okay, so maybe that leg to the downside is not just going to offer an actual correction and then further downside, maybe it's going to be a continuation to the upside, and that will be determined on whether if this potential move to the upside is ends up being 3 waves or 5 waves. If we see 5 waves, like, the first impression that we should have is that there is a trend building up, okay, towards the direction of the 5 waves. Now, what else we also see is that we have had a divergence between these two highs. This is too far, though, to be considered on the 4-hour. Maybe on the daily there's a different case. We have that playing out as well already, but nothing so far. So if we take into consideration this suggests that the next leg to the upside or a next leg to the upside can actually take place, because structurally speaking and without the momentum divergence, okay, there is no signals for a potential bearish move. So the idea for today is that the 2000 level might hold, and we have to pay attention to 2030. So for me, being at 2020 as well right now, this is going to be a range, and its breakout could determine the short and also medium term outlook for gold. When it comes to oil, it was last week where we saw oil and we were down here somewhere, and we did actually identify this trend to the downside, and we did also say that this trend is accelerated to the downside because we've broken outside that channel. We did also mention that in case we don't come back within this channel, that would be an indication for further downside. We were either here or here. Maybe we were here because it looks more like of a case where I remember a sideways correction at the moment, or maybe it was just here. Either way, we revealed the potential for downside, although we also said, because that looks like a 5-wave move to the upside, maybe that would be a correction then, and the further continuation would be seen to the upside. Obviously, it was like some sort of over here, especially like a flash crash here, right? We took the previous low out. A lot of stop losses were closed out, I am sure. That's why that candle is here. And you have a pin bar. This pin bar sweeping over that low over here, whether it comes with divergence or not, because there's no divergence, was a good signal. And we have returned back to the base channel now. We have done 1, 2, and 3, and 4. It looks like we're going up for the 5th. So a potential correction to the downside would or could just be an actual correction. And corrections usually are followed with the trend continuation move, which usually contains, at least in this particular phase of the move to the upside, the potential move would come in 5 waves. Okay. So what this means is that lower on the 1 hour, this is what we have. Yeah, obviously it's a big move, as you can see. We could see prices starting to fall anytime, like might be 72, might be 74, but I would assume that the 74 is going to be a much stronger level, given, of course, we are going to be at the top of this channel. So I'm just going to pull our Fibonacci out, and as a reminder, let's not forget, let's do this for this price action now, from swing low to swing high, anywhere between 38 to 62 could be the level where we have to start looking for signals that imply a continuation to the upside. Okay. Now, can we break all the way up? Well, look at this. We've also got this low over here taken account, 74. So I think the 74 is going to provide us even at least some sort of short-term pullback. If not, another leg to the downside for fresh lows.